Hello, welcome to this video. And if you're new to this channel, I'd like you to subscribe and click the bell button so that you can be a follower in this channel, so that you can get notifications whenever we create awesome videos and strategies. I'm Leke Cosby Finance, and in this particular video I'll be explaining to you how you can use the MACD to be profitable when trading. MACD in itself, it's a wonderful indicator, but you have to be strategic in how you use it. MACD is a wonderful indicator, and so far so good. A lot of persons have used it to be profitable in the market, but notwithstanding, it's been a lot of question of how to use the MACD. In fact, a lot of persons use the MACD and they use it wrongly. But in this video I'm going to actually address that, how you can actually use the MACD to be profitable and how you can use it to trade efficiently. So quickly here, I'm going to add the MACD to my chart. The MACD itself, it's an oscillator, in the sense that it helps you to know the momentum of the market. So this is the MACD, and I'll be adding this to my chart. So the default settings is 12 for the fast EMA, 26 for the slow EMA, and 9 for the MACD SMA. Now what this means is, I really don't want to go into the calculations so that you don't actually get to bother yourself with all that, because the software, the indicator, does all that for you. But basically what this actually means is, the first these two EMAs are what the indicator uses to calculate the difference in the market. Whenever there's a cross with this moving averages, it does the calculation in the background and it plots it on the chart for you. So with this, your histogram is being calculated, and with this you also get your signal line. So this is the MACD SMA. So the result of this, whenever it crosses this, is what gives you your signal. So if you don't understand that, don't worry, you just see that in a bit. Okay, so once you're done, you just click OK. Alright, so this is how your MACD looks on the default. Okay, let me change this line to something thicker. Let's use this. Alright, that is good. Now there are several characteristics of your MACD. You have the MACD on the zero line. You have the MACD on the zero line. You can see this, your zero line. This is the line that demarcates the overbought region and the oversold region. The overbought region is the region above the zero line, and the oversold region is the region below the zero line. Now you notice these vertical lines, we refer to them as histogram. Now the histogram itself is one who shows you the momentum of the market. It tells you the momentum of the market. It tells you that, oh, the market is beginning to cross to the other side, that is going to cross maybe to either overbought or oversold. Because you notice that this red line, which is our signal line, you notice that this red line is lagging while the histogram is leading. What I mean is, you notice that before you see a reaction on this red signal line, you notice that you'd have seen the reaction previously on the Instagram would have given you an idea of what is about to happen in the market. So now, going straight to how to use the MACD. Number one, the first thing you need to understand is a lot of traders, whenever they see that the market is in an oversold region like this, the moment the histogram crosses above this, once the histogram crosses above this red line, a lot of people like to buy along here. You see, a lot of people like to buy along here to make, and they say okay, they'll just make a little bit of profit here, but it is not actually right. Why? Because the actual change of momentum, or I would say the actual time that the MACD has actually crossed to the other side, is when it has crossed the zero line. So if it's for a buy signal, you only start considering a buy signal when the market has crossed above the zero line. Then you only start considering a sell signal when the market has crossed below the zero line. So it's very essential that you understand this, so that you don't get caught up in making unnecessary losses. So that is number one. Then number two, you realize that the MACD, being that the name is moving average convergence divergence, you realize that you can also use it to spot divergence. So if you want to have a good understanding of what divergence mean and how you can use them, then just go over to my previous videos. Just go to my channel and you will see the particular video I created on how you can make use of divergence. So now let me just show you a little example of what a divergence is. Okay, let me just quickly spot a divergence here. I think, all right. Okay, this is a very good one. You can see market was going up here, and you can see the market pushed down here. You can see. So from here to here, this is a bearish regular divergence. That is, it's telling that the market is changing direction. Okay, look at another one right here. You can see this. There's another one. You can see this one is going up. So this is your regular bullish divergence. It tells that the market is changing direction upwards. Now, so that is the second thing you could use the MACD for. Now let me now show you and explain something vital to you. Now this is something that I can tell you that nobody tells you or shows you anywhere, because over the years I've actually done this and I've seen how profitable it can be. Now so I need you to give me your rapt excuse me, I need you to give me your rapt attention in this particular section. Now looking at this, you realize that your MACD crossed above, then crossed below, then crossed above again. Then you notice that when the MACD crossed above here, notice that there was a retest here before crossing above again. Now don't forget that that your entry should be at when the MACD crosses above the zero line or below the zero line, but for a buy signal it's above the zero line. Now you notice that this level here, that you can see it dropped low, then crossed above here. Now you notice that this level and this level, you can see that this level is higher than this level. What does that mean? This tells you that there's a change in the momentum of the market. That means that the downward movement is reducing. That tells you that there's a downward movement. The downward movement is reducing. You don't just see that, okay, the market has crossed here. Oh, you can see that the histogram has crossed above the MACD, then you enter right here. No, it's very risky. Anything could actually happen. Anything could actually happen. Okay, take for instance, look at this scenario now. You can see the market crossed downwards. You can see it crossed downwards. Imagine if you had entered here, you may place the sell here. You'd have been caught up in this wave because you can see the market crossed back upwards. So that's why it's very necessary that you wait for the market to cross again. When it crosses, then check the levels to see if the momentum is increasing. I can see the momentum here is more than the momentum here. You can see this dropped lower than this. So this tells you that there is a strong upward movement. That is why the drop below the zero level is very low. You can see it dropped this way, went up, drop, then didn't drop towards this level for crossing. So right here is where you place your entry. So you place your entry right here, then you make your profit to this level and you're good. Now the next thing you want to see is something like this. Okay, now another thing you want to look out for is you want to look out for when the MACD is in a very, very strong trend move. Now what do I mean? Look at this scenario. Now you notice that the MACD, after confirming this buy signal here, you notice that the momentum went up, crossed down, but it didn't drop below the zero mark, then crossed back again, then crossed downwards again, didn't cross the zero mark, then crossed backwards again. So right here and here is where you can actually make a lot of money also. So you have made money from here, then you make money from this upward cross, make money from this upward cross. Now why this one is different from this is because you notice that the market is in a bullish trend. Then we add series of crosses showing us that the market is pulling back here. There's a pullback here, then push higher, then pull back, push higher again before now dropping. So now the moment you come here, you notice that the market went up, dropped, you can see, to the lower level, to the oversold level, then pushed higher again a bit. Then you notice that it now crossed the zero level. But you notice that when it after crossing the zero level, you notice that the MACD right here, you notice that the MACD, the momentum here is more than the momentum here. So this shows that the market is started coming down. So what do? Simple. From here, you just place your sell. That is from here, you place your sell. Then you ride the wave to this point. So that's how you can actually profit using the MACD. So do not forget that there are basically 4 things you can use MACD to do. The first is you can use it to know the momentum of the market. Number 2, you can use it for divergence. Then number 3, you can use it to know when the trend has changed. Then number 4, you can also use it to know when the trend is continuing. So those are the basic things that I want to explain to you on using the MACD. So I believe you had a good grasp of what I just explained, and if you have any questions, please put in the comment section below, and do not forget to also check the description. You will see the link to our Telegram group where we give free signals. So do yourself a lot of favor to join that Telegram group. Trust me, it's going to do you a lot of favor. And also, if you want to contact me directly, my details is in the description below. And do not forget to also subscribe if you're a new viewer, if you're a new visitor. Join the community, be part of us, and you're certainly going to make the market. So for now, I will see you later. I'm Leke, Cosby Finance. Take care.